So I know you want to buy a house and you're super excited to do so, but you're afraid because you don't have 20% to put down on a home. Wait a minute. Who told you that you need to put 20% down? Who said that? That's fiction. That's what we call a real estate myth. Let's get into the facts in this video about down payment. How much money do you really need to put down when it comes to buying a house? Like, share, and subscribe. Let's go. Hey guys, how you doing? Sascha Chatman here, team leader Chatman Realty Group. We help folks buy houses all over Texas and Atlanta, Georgia. Now, let's jump into this whole thing about down payment. We're going to explain some things to you. A lot of people believe that you need to be able to put down 20% when it comes to buying a home. And that is nothing more than a real estate myth. You do not have to put down 20% when it comes down to buying a home. It is great if you can put down 20%, right? But it's not required. And 20% can be a lot of money. So let's do some math here. Let's say you're buying a $300,000 home and you need to put 20% down, or you want to put 20% down. That means you're putting down $60,000. That's just the down payment. Plus, you'll have the closing costs as well, which is going to be even more money, typically 3 to 3.5%, depending what you're doing here. Okay. So, this right here scares a lot of people from trying to buy a home because they really believe they need 20%. So let's go ahead and look at where did this come from? Okay. The 20% number came from the fact that it's very beneficial. So let's talk about that. Number one is beneficial to put down 20%. What exactly are the benefits? Well, here it is. If you put down 20%, okay, it shows a certain amount of financial stability to your mortgage and lender that you can really truly afford this home. So here's some of the benefits that come with that. The biggest benefit that I like about putting 20% is no private mortgage insurance. That's if you're doing a conventional loan. So there's no PMI. So typically what PMI is it's private mortgage insurance that the lender or mortgage company is going to take out to make sure that you can cover the loan in case you defaults. If you default, they have insurance that boom will kick in and cover them, right? I know you're paying their insurance, but it is what it is. Now, let's talk about it. How much can that be? That can range depending on how much house that you're purchasing. That can be anywhere from $120. I've seen it be as high as $400. It depends on the house that you're purchasing and what's the terms of the loan. But that's one big benefit. The other big benefit of it is number two on that one. When you put 20% down, you don't have to escrow everything. And this is what I like to do. All right. Here comes a good secret. I put 20% down on the home. Right now, I don't have to pay my taxes or my insurance within my escrow account. I can pay that on your annualized basis. I love to do this when I buy a home because I don't like monthly bills. I just hate that. So let's say, for example, let's say my mortgage is $1,600 plus my home's owner insurance is going to be another $200. So now we're at $1,800, and then we started looking at the taxes. Taxes running around $400. Okay, so now we're looking at $2,200 total. If I put down 20%, I pay my taxes and I pay my insurance on an annualized basis. Now, guys, I'm only paying $1,600 a month. So what do? Then I double up that payment instead, and I just pay $1,600 twice, and I'm paying my house off a lot faster. You can do this if you put 20% down. It's one of the things that help people pay their homes off a lot faster. So it's a benefit of putting down 20%, but it is absolutely not necessary. A lot of people mess that up and think it is necessary in order to buy a home. It's not. Now let's talk about the different type of loans that are out there and how much you have to put down when it comes down to the down payment. Number one, let's talk about the FHA. That's from the Federal Housing Administration. Okay, so the FHA loan is 3.5%. That is what's required by the FHA loan. You got to put down 3.5%. It's a far cry from 20%. Let's do some math on that. If you're looking at a $300,000 house and you think you got to put down 20%, that's $60,000. With FHA, it's only 3.5%. So that is 10,500. Huge difference. Huge difference. So yeah, 3.5% for FHA guys. That's what's required. That's what you have to put down. Okay. VA. Well, 0%. You don't have to put down anything when it comes down to the VA. Okay, so that is for our veterans out there. They fought for our country and they have a zero down payment for their home. Now, you could put down more money if you want to, if you're a veteran, and that's just going to go try to bring your balance down in terms of what you're going to be paying. But let me give you the game on that. You need to put tens of thousands of dollars down in your down payment, no matter what type of loan we're talking about, in order to make a huge dent on your payments. Okay. If you're just putting $10,000 down, you're not saving a lot. 20,000, 30. You need to get up to $50,000 to see a significant difference in terms of what your payment's going to be, depending on the size of the house that you're trying to buy and the balance that's going to be on that particular home. But if you're a veteran, your down payment is zero. This is where people get confused at. Let's talk about conventional loans. Conventional loans, people think automatically are 20%. This is where the myth comes from, and it's not. Okay. It is not automatically 20%. Okay. A conventional loan is going to be very dependent upon the type of loan product you're buying and what you're planning on doing with it. So I've seen conventional loans be 20%, 15, 10, 5, 3%. I even seen 0%, which we're going to get into that in a minute. So depending on what you're actually doing and the type of financial plan you're putting together with your lender, and your lender should walk you through this, a conventional product, you should not be afraid of that because you need to understand that you don't have to put 20% down. You can put down a great deal, and that lender will be able to model that for you to show you what makes sense. If you don't have a good lender, I have some great lenders no matter what state that you're in that we can refer you to who can help you see the numbers in front of you. By far, you don't need to do this by yourself. You need to be working with a lender, a good, reputable, local lender. Let me point that out. A good local lender that can help you and figure out what you're doing. All right. One thing I want to point out when it comes down to a conventional loan is this. If you are doing a conventional loan, this is the only product that once you get to the point of having 20% equity in your home, okay, now you can drop the private mortgage insurance. If you do FHA, that private mortgage insurance is going to live with the life of the loan and never goes away, never goes away if you have 20% equity. So understand when it comes down to a conventional loan, if you have 20% equity in your home and 20% equity in people's homes are growing very, very quickly now in this particular market as home values are going up, you can get rid of your private mortgage insurance, thus lowering your payments. Another benefit to conventional loans that I do like about them. Okay. Now, let's talk about 0%. When you put no money down. How's it happen? Well, guys, that's usually what we call a down payment assistance program, DPA for short. All right. So that's when most people are working and getting a city, state level, or even a federal level program in order to buy a home. For example, down here, we have something called T-Shack in Texas. That particular program can allow a person to get 3%, or 3%, 4%, or even 5% money down. That money can then be used towards the down payment or the closing cost. So let's say this differently. If I'm an FHA buyer, okay, and I got to put down 3.5%, I stack on top of that a down payment program giving me 4% or 5%. Guess what? I just covered my down payment. Okay, that's how those programs work. What you need to know about a down payment assistance program is that you take the rate of the program. It is not always about your credit score. So I want to be clear about that. So if you have a great credit score, let's say you have a 700 credit score and you get quoted in today's market 6%. As I make this video, let's say you get quoted 6% in today's market. Down payment assistance may cost you for 3%, you may have to put out um, in order to get the 3% money, your interest rate might be 7%. To get to the 4% money, your interest rate could be 7.5%. To get the 5% money, it may not even exist because it's market dependent, but it may end up at 8%. So what happens with these down payment assistance programs, while they're here to help you get the down payment and or closing costs, you got to ask yourself, is the juice worth the squeeze? Sooner or later, your payment starts to creep because you're adding on higher and higher interest rates. But this is what when people are talking about when they say, "Oh, I got a house with no money down." It is very possible to do. We can stack on the down payment assistance program, use that for your closing cost. You're a veteran. Now you have no down payment, you have no closing cost. Easy, easy peasy. It's not difficult to do. You just need to understand it. Talk to your lender about it. Talk to your real estate agent about it. What are the requirements in your area? And what are the payments going to look like? And please, please make sure you understand how long that particular program applies to you. And what I mean by that is this: typically, those programs come with a secondary lien put against your property. So if you got to sell the house, let's say some of these programs last for 3 years, right? You have to keep that house for at least 3 years. If you sell it beforehand, you got to pay the money back, okay? Or the money progressively gets less and less and less as the years go by, okay? Think about it. If they didn't do that, everyone would be taking this money and flipping houses, and then it would be chaos, utter chaos, because people be taking down payments. This is money and making hell of real estate investments. So they shut that down and make sure what's going to happen from that perspective. All right. The last thing I want to say about down payments is this: you don't have to do this alone. We already talked about down payment assistance. You can get a gift from friends and family to help you with your down payment. Yes, it just needs to be tracked. Your friend or your family member can give you money. If mom and dad got some money want to give you, wham, bam, thank you, ma'am. Instead of going for a vacation or a honeymoon, ask mom and dad for 5 grand if they're going to give you 5 grand and go buy a house, right? I've seen people do it so many times. You can take a gift. That gift can be used for your down payment. Your lender needs to know about it, and it just needs to be tracked. Okay. Do not fictitiously just come up with $20,000 of mattress money. You're going to trigger questions on that. All right. You know who I'm talking about. I've seen people do it. You know who you are. Money just materializes somewhere. Paper trails in this game, guys. Paper trails. I'm just saying. All right. We're not going to go there today. We're not going there today. All right, guys, that is the truth about down payments. You do not have to put 20% down. It is not necessary. A lot of people think it is, but it's absolutely not. I hope this video helped you and explained the different type of down payments you have to put down, per the loan that you're looking at, and the other options that are available to you. If you're looking to buy a house here in 2023 or anytime when you watch this video, feel free to click on the link and schedule some time with me or give me a call. Myself or one of my agents will be more than happy to help you. We sell houses all over the Metroplex. And if you're not in our area here, we'll be more than happy to refer you out to a great agent. We have a huge network of like minded agents that want to help you, educate you, and take care of you. I'm Sascha Chatman, team leader, Chatman Realty Group. Like and subscribe to our YouTube channel if you're new here, guys. Smash the like button, guys. You guys take care. Peace.